Well, happy 2024. Christmas and New Year's were fantastic. Loved it. Hope you did too. For us, we had our third oldest, our second son, get married right in between Christmas and New Year's, much to my wife's chagrin, right? It was a little bit stressful for her for getting it all done, but boy, we had a good time. And we're so happy to have Megan as part of our family. If you're watching this video, welcome to the family, Megan. And it's just been a wonderful time to be with family and move things forward. Just having fun and relaxing a bit. But we're back, right, in 2024. So here we are. Let's get started and talk about what to expect moving forward. Shortly, here in the next week or so, I'll have a forecast put together. So kind of a rate and markets forecast so you can see what we might be expecting to see when it comes to mortgage interest rates and the economy in general as we go forward in 2024. So watch for that. I'll announce that when I get it recorded here over the next week or two. Now, in the meantime, today, let's take a look and talk a little bit about what to expect this week. I know it's Tuesday because of New Year's Day yesterday. It's not a Monday video, but we have a lot happening. There's a lot of data that we're expecting to see later this week. First of all, what we're expecting to see on Wednesday are the notes from the last Federal Reserve meeting. So a few weeks ago, remember Jerome Powell came out after the meeting and had a press conference and announced, hey, it's very possible that we'll start dropping the rate, reducing the federal funds rate probably 3 times at least in 2024. So it'll be very interesting to see how the market digests and dissects the actual minutes from the meeting as they're read by economists and market participants on Wednesday. So that could be a market mover. Then on Thursday, we have the ADP jobs report, and that's one that comes out every month. It's the private payrolls, service, if you will, from ADP. They're a payroll and HR type service, but they're so huge. They cover so many industries and companies throughout the country that they produce their own jobs report. And this is not always correlated real closely with the government report that always comes out a day or two later. This week, that BLS government jobs report comes out on Friday. So between these three, the federal minutes, Federal Reserve meeting minutes tomorrow, the ADP report on Thursday, and then the BLS report on Friday. There's a lot of data that's going to be coming out into the market, and we could have some market movements that are fairly large, hopefully improving interest rates as we go forward, but we'll see. Now, again, as we're looking at jobs data, what we're looking for is weaker jobs data, right? Indicating a slowdown in the economy, but of course, hoping for a soft landing and not a major recession going into this year. If we get a soft landing with a minor recession or no recession at all, but seeing this jobs data cool a little bit, unemployment tick up a little bit, but not a lot, that sort of thing, that will continue to support lower interest rates, and we'll see the markets react positively to that, especially the bond market will react in a way that will cause interest rates to continue to fall. So let me show you what happened over the Christmas break, over the last week or two here. And so you can see kind of what the markets have done. So looking first at the 10-year Treasury, of course, this is the kind of leading indicator for mortgage rates. And this chart is backwards, right? The inverse of the mortgage rate. So this shows the yield. As you can see, the yield has been falling steadily since the middle of October, like we talked about many times over the past few days, last week into this week. It has reversed course a little bit and gotten a little bit higher, but we're still above that 4% mark. We're still in the 3.95 range, which is good news. And as we continue to see this, hopefully reverse back down and go back down over this week and going into next week, that will be a leading indicator showing that mortgage rates are improving as well. Let's take a look at the Universal Mortgage-Backed Security 30-year bond. This is a 6% coupon, the most widely traded coupon of 30-year fixed mortgage rates. This shows the price. And as you can see here with my cursor, you can see the price has been improving and increasing quite a bit since the middle of October. The past few days and end of last week into this week, we've seen the price drop a bit. Today hasn't been pretty. It's dropped 20 basis points. It's a fairly large move in one day. But we are still holding steady above this Fibonacci level and above the 25-day moving average, which is good news. If we stay above that, typically the 25-day moving average acts as a leash, like a dog on a leash, right? The market's never moved too far away from the 25-day moving average. So we've been moving back towards it right now. If we stay above that, we could easily see a reversal depending on what happens with the jobs report numbers and the Federal Reserve's meeting minutes tomorrow. So that's the update for today. I'll keep you posted as we go forward. Follow me on Instagram as well if you'd like other updates. Occasionally during the week, we'll do other updates with news flashes of things happening throughout the week, and you can catch those on Instagram. Find me at the Bill Zimmerman on Instagram. Have a wonderful week. We'll talk to you soon.